And this is breaking news hot off the press. We're now going to be joined by Daniel Lacalle, Chief Economist at Tressis and author of Freedom or Equality. Daniel, thank you so much for coming on today. I mean, wow, what a development. Give us your initial reaction.
President Trump is a negotiator, and he, from the very beginning, made it very, very clear that tariffs were put in order to balance the trade environment, to level the playing field. So it's logical that now that 75 countries have immediately reacted, showing their willingness to negotiate, he is giving them the opportunity to lift the non-tariff and tariff barriers that hinder the economic growth, investment, and development, both of U.S. companies and international companies, in order to make a much better trading world than the one that we have been living in the past 15 years.
Daniel, so what's your best guess as to what's happening right now behind closed doors?
My best guess is that we are seeing a frantic activity of negotiation from all countries, and that the Trump administration is showing them the document and the different elements that they have been complaining about for years about international trade, in order to reach an agreement that is positive for everybody. Because we must remember one thing. A lot of the things that the Trump administration demands from its trading partners are things that the businesses in those countries are demanding as well, like in the European Union. There is nothing that the European Union leaders, including the ex-president of the ECB, Mario Draghi, are demanding about internal trade barriers that are not demanded as well by the Trump administration. So basically, what we can get to is a negotiation that leads us to a better, more free trading world than the one that we have been living in. In the case of China, it's completely different, because this is not just about trade. It's about geopolitical concerns. It's about the bans on technology companies in China. It's about the restrictions to investment, and it's about property rights as well. So there's a lot more that needs to be dealt with in the particular case of China, which obviously decided to retaliate, and that was a bad mistake, because what we are likely to see is that a tremendous number of other countries are going to immediately announce a literally flood of trade deals very, very quickly.
And you're right, the situation with China is different than other countries. We'll get back to China in a moment, but I want to keep talking about the fact that before this announcement that just happened, 20 minutes ago from Trump, we were starting to see this divide between countries that were seeking talks and countries that were retaliating or planning to retaliate. Now, I guess on the show yesterday, he said that at this point, Trump really holds all the cards. So now with this pause that the president has enacted, could we see countries that have wanted or have been retaliating, like Canada or maybe even the EU, could they be taking this chance to ultimately come to the table?
Absolutely, because they only have two options: negotiate or lose. In the case of Canada, we have seen a completely different strategy from the government of Canada compared with the government of Mexico. And the government of Mexico perfectly understood that this is a negotiation strategy. And they have actually achieved much better results for the Mexican economy and for the U.S. economy than the Canadian government, that decided to go in an interventionist and protectionist way. In the case of the European Union, it's very positive to see that the European Union leaders have gone from announcing all sorts of interventionist measures to start to offer elements of improvement. All of that is likely to be positive, but there's a lot of ground to cover. This doesn't end with a small reduction in trade barriers in industry. It needs to reach farming, it needs to reach agriculture, it needs to reach the automotive sector. There's a lot to do, and I think that the Trump administration is working 24 hours, 7 days a week in order to get good deals quickly that are going to be good. And I come back to the point, not just for US companies, but it's going to be good for all international exporting companies.
Well, Daniel, we just saw their huge jump in the stock market. Dow Jones jumped, NASDAQ jumped. Now, markets, they usually don't like big changes or this type of uncertainty. What do these jumps tell you?
What these jumps tell me is that markets are way too are taking a very pessimistic approach. It's led by the comments of investment banks and some Keynesian economists that are fear mongering about a situation that anyone that has lived the reality of what President Trump has done in the past, the reality of the previous administration, the reality of the promises shows us, which is that what he is willing to do is to reach agreements, is to negotiate deals that are going to be positive for everyone and level the playing field. If everybody understood this, we would not have had the massive reaction of markets in the past days. However, unfortunately, in markets, we go from periods of excessive optimism, as we had at the end of 2024, to periods of excessive pessimism. And obviously, this creates opportunities for long-term investors, and that's why people with a long-term view were buying throughout the correction.
Now, let's look at China again, Daniel, because according to Bloomberg, Amazon is canceling wholesale orders from China in order to avoid tariffs. And that was even before Trump just announced that 125% tariff that's effective immediately. Could this end up becoming a trend, do you think, that ends up isolating China from the global market as it ramps up this trade war against the US?
I think it's very clear. We have heard from Walmart, from Costco, from US Foods, from the largest distributors in the world that they are telling their Chinese suppliers, we are not going to accept price hikes from the tariff war. If they start a trade war and they come to a point in which the government is imposing retaliatory tariffs all the time, what ends up happening is that it doesn't make any sense because China has everything to lose. The trade surplus is so enormous with the United States. And what the Trump administration knows is that China has two Achilles heels. Number one is that the enormous overcapacity of the productive sector in China can only sell to the United States, which is the richest and the largest economy, and therefore the only way in which can address its second Achilles heel, which is its requirement to bring in an enormous amount of dollars in order to address the weakness of the local currency, the yuan. So China is actually playing with fire because what they're actually doing is creating a much more negative environment for its own companies. What China needs to do is to open its economy. Unfortunately, in the past 7, 8 years, the Chinese economy has not been opening, it has been closing. So there is a very significant change in the pattern of trade in which now there is no benefit in terms of importing into the United States cheap goods, because ultimately those dollars that are going to the Chinese economy are used to try to shield away the Chinese economy and other of its trading partners from the US dollar and from the US financial system. Therefore, the negotiation now from the Trump administration, and that's why these tariff increases are so important, coming from the Trump administration, is to remind the Chinese government that it needs to address its enormous tariff and non-tariff barriers, open its economy or lose. It's negotiate or lose. There's no other option.
Negotiate or lose seems like that's a bit of President Trump's playbook right now. Now, Daniel, talk to our viewers out there. Some people, when they're hearing all of these things happening, all of these changes every day, they're spiraling a bit, right? But I've spoken to other economists. They say stay calm, wait for a while, see what happens. The world's not ending just yet. So how do we look at this whole thing holistically, especially during the next 90 days?
Forget about equity markets. Equity markets overreact on the upside and on the downside. Equity markets went through the roof. The German stock market went to all-time highs despite an economy that is stagnant and businesses that are not doing well either internationally or domestically. So markets were too aggressively exposed to expectations of rate cuts and monetary easing from central banks. So don't get worried about stock markets. Think about the real implications of this tariff tantrum that we are living. And this process is positive for everybody. The reason why living outside of the United States, I am defending the policy of the Trump administration is because I know that it will be positive for European companies and it will be positive for US companies and for the US consumer and European consumers. And what I would definitely recommend to all our viewers is don't listen to those economists that said that the enormous increase in money creation and in government spending of 2020 was not going to generate inflation. You are now suffering from persistent inflation because of those government policies and enormous government spending. And they were wrong then, and they're wrong now about the tariff implications. The likelihood of the tariff negotiation ending in a stronger, productive economy that brings more investment and more jobs and improves the free trade of the world is very, very high. So don't worry about that. Furthermore, this is going. Scott Bessent, the Secretary of State of the Treasury, has said something that I find exceedingly important. The next 4 years are going to be the years of Main Street. The past 4 years were the years of Wall Street. Wall Street made a tremendous amount of money and will continue to make money because companies will do well, but made a tremendous amount of money when at the same time citizens, the middle class, were suffering, real wages were not growing, employment was being mostly built by immigration and weakening of conditions for the middle class. The productive economy was not growing and the deficit was ballooning. So now this next 4 years are going to be about Main Street. What people need to think is don't worry about the equity markets. Equity markets will come back. As you can see, basically it can all happen in a matter of hours. Huh? And more importantly, think about Main Street. The next 4 years are going to be for the middle class and not against the middle class like the past 4 years.
Well, as some experts like to say, stock markets are not the economy. Daniel Lacalle, thank you so much for joining us today.
Thank you very much. It's a pleasure.
Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.